Hey guys, on today's episode, we are going to take a look at one of my favorite companies right now. This is Sea. They just reported earnings. And many people might consider this the next Amazon. For me, I consider this my next biggest winner. Like always, my name is Jose Najarro, and by day, I'm a senior electrical engineer, but by night, I'm a self-taught investor looking for new companies to hold for long-term gains. If you're new to the channel, don't forget to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much. I truly appreciate it. So today's episode is going to be broken down into the following. First, we're just going to take a quick overview of their most recent earnings, take a look at their financial numbers, and then I'm going to end with my overall thoughts. And go down to the comments below and let me know what you are doing with Sea at the moment. Are you buying? Are you selling? Are you holding? While you're down there, you should also see a link to my Discord channel. It's free to anybody that wants to join. I post every time I buy and sell there. And finally, you should also see a link to Webull. If you sign up following that link, we both could get a free stock. I think right now they're doing a special. You guys can check. If you sign up, there's actually 2 free stocks for both of us. So what's better than free stocks, right? So make sure to check that link out. All right, so let's take a quick look at price movement. So this is ticker SE. If you guys don't know, Sea is a tier 1 stock for me. Pre-markets right now is down $7, close to 4%, and is sitting at $172 roughly compared to where it ended the day, which was $178, and that was already down almost 2%. Current market cap is probably around $80 billion right now with this current drop. So let's take a look why the stock price is dropping. All right, so let's jump into the earnings right now. Q3 GAAP earnings per share were negative 69 cents, which missed expectation by 1 cent. Revenue was $1.2 billion, and this is up 97% compared to the same time last year. And Q3 adjusted earnings before interest, taxes, depreciation, and amortization was $120 million. So first thing we're seeing is triple digits revenue growth, right? This 97% might as well be 100% right now in overall GAAP revenue. We see growth in their digital entertainment up 110% compared to the same time last year. And we see the e-commerce GAAP revenue up 173% compared to the same time last year. So we're still seeing huge growth in these numbers, triple digits all around the maps, which is pretty darn impressive. If we take a look at total gross profits this quarter were $407 million, and this is up 101% compared to the same time last year. Another triple digit growth here, which is insane. Next, let's just take a quick look at where the expenses are. Like I mentioned, right, this company right now is not profitable, and this is the major reasons. They're spending a lot of money right now in cost of revenue, in sales of marketing. Sales of marketing has almost doubled. That means they're either increasing their overall sales team, they're increasing their advertisement as they're trying to grow all around these other countries. General and administrative expense almost increased 100% as well, and research and development increased more than 100%. So not only is their growth seeing over triple digit growth, their expenses right now are seeing over triple digit growth. But this is to be expected as this company is hitting new markets, is hitting new countries, and it's just trying to overall grow right now. It's in that growth phase. So they're spending all their money to make sure that growth continues. And we're seeing that working really well with the type of growth we saw in the revenue in the previous slide. All right, next let's take a look at this adjusted earnings before all these expenses. Right, so we can see where all this money is actually coming from. We can see the most profitable market for Sea right now is their digital entertainment, which is pretty much their gaming entertainment. This collected a positive $584 million, and that's up 120% compared to the same time last year. One of the biggest losses they see is from the e-commerce side. The e-commerce side, they lost about $300 million there compared to $253 million a year ago. So there is a growth there. They're still seeing bigger losses now, but actually the losses per order are less now. And let me explain why there's losses here. So e-commerce, we see it with Amazon, we see it with Melly, and we see it with all these other e-commerce sites that the actual e-commerce has very low gross margins. I think gross margins for Amazon are mid-single digits. So what happens here is at the beginning when you're trying to grow, you're using all these expenses on shipping, on boxes, on packaging. on just the overall logistics of it and all this advertisement that you're actually losing money on your sales at the beginning. What ends up happening in the future is you get better at that, you start increasing your volume, all the prices start to decrease, and overall it starts increasing your gross margins and makes you profitable. But at the end of the day, e-commerce usually has a very low to mid single digits margins of profits, and that's what we're trying to foresee. So even though our losses increased a lot higher compared to the same time last year, the overall loss per sale actually decreased. A quarter ago, the overall orders lost about 79 cents per order. This year, it was 41 cents per order. So we're seeing a decrease. We're seeing that reduction of prices. We're seeing that we're getting closer to profitability. Obviously, eventually, we want it to be positive order gains opposed to the lost sales that we have right now. All right, next, let's take a look at each segment individually. But before there, you guys should see a link down below for 7 Investing, where every month they recommend 7 stocks for $17 a month. If you use my link or promo code Jose, Josc, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their service and would recommend it to anyone. All right, so let's take a look at their digital entertainment. So digital entertainment quarterly active users are up 78% compared to the same time last year, and their quarterly paying users are up 124% compared to the same time last year. This is insane. More users are using their platform and more users are paying for their platform. The overall bookings, like I mentioned, for this company were up 110% compared to the same time last year. And now quarterly paying active users represent 11%, almost 11.5% of the total active users, where a year ago it only represented 9.1%. So we're seeing faster growth in quarterly paying users compared to quarterly active users, which is amazing, even especially since quarterly active users are seeing strong double-digit growth. The biggest reason for it is their self-developed global hit game. Free Fire continues to be the highest grossing mobile game in Latin America and Southeast Asia in the third quarter. And in Latin America, they're hitting Brazil right now, especially with the Garena. And right now they are doing a lot of, they see the momentum that this game is going. So they're using a lot of esports and community to try to even expand that growth. And it's working right now. The esports tournaments are seeing strong numbers. They're seeing 150 million online views to date right now for quarter 3. And if you guys don't know, Sea also is owned 30% by Tencent, which also owns a live streaming platform by Huya in Brazil. So Tencent is using its partnership with Huya and Sea to overall increase that exposure. They made this partnership with Huya in Brazil, where now this Free Fire is streaming in Brazil with this Huya platform, which is seeing strong growth for both Free Fire and both Huya. 3 companies that I'm completely bullish on. Next, let's take a look at their e-commerce. E-commerce gross orders increased 131% compared to the same time last year. That is insane. And their gross market value also increased 103%. We just keep seeing triple-digit growth all over the map here. Like I mentioned, GAAP revenues for e-commerce was up 173% compared to the same time last year. They also saw huge numbers in their digital financial service. So if you guys don't know right now, you know, Sea is in 3 of my favorite markets: the gaming market, the e-commerce market, and the digital financial market, fintech, right? And right now, 30% of their orders, of Shopee's gross orders, which is their e-commerce sites, were paid using their mobile wallets in October 1st. That is insane. That's some huge integration between the two. So people who are using Shopee are also using their fintech service, which is just overall trying to make this super platform in Southeast Asia. Next, you just want to take a quick look at their cash and cash equivalents. Right now, they have about $3.5 billion of cash. They have plenty of cash. We're going to take a look at their balance sheet in a bit, but things are looking good in forms of returns. They also did raise their guidance. So now Garena's guidance is $3.1 billion for the full year of 2020. The previous guidance was $2 billion. That is a huge gain and is expected 75% year-to-year growth. Then Shopee, their e-commerce, is expected to be $2.3 billion. This was compared to their $1.8 billion previous guidance, and this still represents represents 144% year-to-year growth. So this is insane. Look at that. Garena goes from $2 billion to $3.1 billion. That's over a 59% increase there. And e-commerce went from 1.8 to 2.3. That's about a 30% increase there. So this is insane, the type of guidance they're giving. And look at these types of year-to-year revenue growth. All right, so now let's take a quick look at their balance sheets. The only thing I wanted to take a look at is their cash and cash equivalents. They have about $3.5 billion of cash, like we mentioned, and convertible notes, they have about $1.9 billion. So this company pretty much has enough cash right now to pretty much pay off all its total long-term debt. That is okay with me. They have total liabilities of about $6 billion. $2 billion of that total liabilities is deferred revenue. So their actual total liabilities is about $4 billion, which is close to what they have of cash and cash equivalents. So this is actually a very, very strong balance sheet for me. And I do believe their convertible note debt is going to decrease because they mentioned that in October 2020, they ended up actually trading some of those notes for actual shares. So we are seeing an increase in dilutions, but we're going to see a decrease in their debt, which is a great thing to see. Next, I wanted to take a look at their net cash flow. We saw that this is a company that's not making money right now. So I wanted to make sure that they're not burning a lot of money. In the past 3 months of 2020, they've actually increased their cash and cash equivalents by $656 million. So they're not burning much cash right now. Most of that money is generated from financial activity. So this is either selling senior notes or selling shares. But we can see they are profitable in operating activities as well. So I don't see this company burning cash right now. Things are looking good, but we are probably going to see more dilutions as the years progress. And next, let's take a look at my thoughts. But before, don't forget to check out the merch, guys. Self-taught investor, like I mentioned, I've been doing this for the past 7 years, and I thought this was the perfect merch. I'm pretty sure most of you guys are self-taught investors. And I have hoodies and shirts, all different colors. So make sure to check it out. And also, if you want to continue to support me and you want to do it for free, I do have a second channel, Jose Najarro Entrepreneur, where I pretty much just talk. I'm a very entrepreneur spirit where I want to improve myself. And I've been doing a lot in the past 7 years to get to the life where I'm at today. So if you guys want to check that out from your average Jose, your average Joe, make sure I have 2 videos. The first one was 4 best ways to make money in the market right now, some side hustles. And my most recent videos was actually 5 websites to overall increase your skills with very to almost no cash needed, and strong platforms that I have used to increase my overall skills from my engineering to coding to my stock market education as well. So now my thoughts. First, let's take a look at the charts for C. C right now, if I'm taking a look at the charts with the current price, is not completely overextended. It's sitting at this moving averages right here. The other things that I'm seeing is I want to see where there's a lot of volume. That tells me within what stock price. So if you guys don't know, I'm using volume profile here. Which this tells me is it tells me the overall volume at a set stock price instead of volume at an overall day. This helps me see at what stock price was there a lot of movement. And I see very, very strong movements between the stock price of 145 and 175. That is a high range, right? But I'm a long-term investor. I'm looking for five-year gains. So I'm not really worried about a few pennies, about a few dollars. So I really just want to see at what ranges, at what levels are we seeing strong support? And I'm seeing it around those levels. So right now we're a little bit above those levels. So there is a possibility. It's not a guarantee that there might be a small pullback. So now let me talk about my overall thoughts on C. First, what do I like? The overall markets they're hitting 3 markets I'm completely bullish on: the e-commerce, the gaming, and the fintech. Next, we're seeing strong growth in all of them. E-commerce and gaming are seeing triple-digit growth. That is insane. It's been seeing that for the past few quarters as well. Their balance sheet is super strong, in my opinion, right now. They are positive in cash flow from operations, and their improvement of the guidance that we saw was amazing as well. How do you go from $1.8 billion in Garena to about $3.1 billion? That is insane improvement in guidance. What I don't like, obviously this is my favorite stocks right now, but I have to say some things I don't like. My major thing is there's still a big loss in e-commerce side, but we saw that is overall improvement. They're seeing less loss per order. So right now The huge loss is because they're seeing more orders compared to the same time last year, but the loss per order is decreasing. The second thing I don't like is the overall dilution of shares. I do believe it is a smart move for them to make sure to continue to have a strong balance sheet right now while rates are pretty low, but it's still something I'm not too happy to see. How would I play C right now? C is one of my biggest positions right now, so I don't mind dollar cost averaging from time to time. When I see a bit of a pullback, I might buy a little bit, and increase my overall exposure. If I didn't have a position in C, I normally don't look at technicals, and I just go in with the entry position. I believe C for me will still be a 5-bagger for the upcoming 5 to 7 years. And that's what I'm looking for. I'm looking for stocks to be better than the overall market. It has been very volatile and it has pulled out a lot compared to the beginning of the year. So we are going to see a lot of volatility. So there's going to be some big drops, but with those big drops also come big gains. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up, and let me know what you guys thought. Take care, have a good night, and see you next time.